Hello and welcome to Synopsis' third video in our series addressing ways to help your local government navigate the financial impacts of COVID-19. Today's topic, new growth projections.
In this video, we will explore what our financial projection will look like across a wide variety of revenue and expense drivers. The kind of projections we will be showing here will have to be revisited consistently by local governments as we move through this uncertain environment. Being able to respond and adapt quickly and efficiently will prove immensely valuable for making the best decisions possible for your community. Previously, we showed what our projections might look like with some adjustments to the budget year as a starting point. Here, we are going to do things a little differently. Let's assume the budget year we have shown finishes out prior to any major disruptions. That will allow us to look at our projection purely in terms of future growth. Let's start with major tax streams. We know sales tax and income tax will be the most reactive to our current environment as the most economically sensitive tax streams. Individuals have immediately and substantially reduced their spending, and in tandem, the country has experienced record unemployment claims. Similarly, tourism taxes such as hotel and occupancy tax will experience sharp declines, and we will assume the impact will be longer term. Not shown here, but if we have business or excise taxes, we would be making similar substantial adjustments. For property taxes, in general, there is a definitive lag between economic results and how these taxes are realized, and depend on local factors such as frequency of reassessments. Here, we are going to assume that the current sharp reduction in new housing construction and development, as well as a higher than anticipated foreclosures, will deteriorate our assessed value and collection rate against what was originally projected. We will also be adjusting our non-tax revenue streams down accordingly. Our fines, fees, and user charges will likely experience more moderate declines. We will have some reductions in parking meters and tickets, red light camera revenue loss with less commuting. Limited court activity means less fines. Any program service revenue, such as recreation classes, will suffer in tandem with local stay-at-home orders. With overall economic contraction, our licenses and permits revenue is slowed as well. Few new businesses are opening up, and weddings are getting delayed. For intergovernmental revenues, this will depend heavily on how the current crisis is impacting our state in particular. We will assume some delay in the translation of state revenue impact down to the receipt at the local level. On the expenditure side, our baseline may not be impacted as substantially, but we want our revised projection to be reflective of the future, absent our proactive measures to contain those costs. For our public employees working at the front line of the crisis, we are experiencing increases in personnel costs stemming from overtime and hazard pay. Our most substantial cost increases will be directly related to our exposure to the overall healthcare sector. In areas outside of healthcare, we may actually see a natural decline of expenditures. Functions such as recreation, plan review, and inspections will experience lower overtime, reduced maintenance needs, facility closures, and event cancellations. Due to the investment loss suffered in the stock market, we will expect our required pension contributions to increase as those losses are amortized. The level of impact here will greatly depend both on the ultimate level of recovery in the equity markets, as well as the current funding health of the pension plans we participate in, either individually or a multi-employer plan at the state level. Although a full revision may take more than these 5 minutes, one can see how Synopsis enables a quicker path to clarity and confidence on your financial trajectory. Join us for future video examples of how we might develop these various cost reduction and cost delay initiatives to manage through this turbulent environment.